Hello, everyone. We're back again. This is Job Order Costing, Chapter 2, Part 2, where we are going to go over homework problems. So let's pull the problem up so we can see it. Okay. Now, in this chapter, we are going to do exercises. All the homework is going to come from exercises. The exercises are focused. They are focused on one topic at a time. They tend to more clearly illustrate what it is I want you to know. And they're also a little bit easier. Okay. So the first one we're going to do is exercise 5, calculating the predetermined overhead rate and applied overhead. So they give us a list of things. And again, in accounting, they give you a list that's longer than you need most of the time. Total expected costs. And then they want us to calculate the rate, the predetermined overhead rate per direct labor hour if the average direct labor rate is $15 an hour. So wouldn't it be nice if they did two things? Wouldn't it be nice if they just told us what the total estimated overhead is? We're going to have to go through this and pick out what we need and ignore what we don't. Second thing, wouldn't it be nice if they told us the number of direct labor hours? They didn't. So we're going to have to figure that out. Okay. Fortunately, neither of those things is that difficult. So this is exercise 2-5, and this is on page 85 of your book. And the first thing, calculate the predetermined overhead rate. Calculate the predetermined overhead rate. Now, to do that, we need to know total estimated overhead, and we need to divide that by total estimated direct labor hours, right? DLH. So how do we calculate the total estimated overhead? Total estimated MOH, manufacturing overhead. Well, let's figure it out. Let's add the amounts together. It's going to be this machinery, depreciation, supervisor's salary, supplies, property tax. It's not going to be bike parts. This is a company that manufactures bicycles. Bike parts are direct material. Doesn't include direct labor, doesn't include the selling and administrative expenses. So we're talking factory machinery depreciation, factory supervisor salaries, factory supplies, factory property tax. Should we make a list? Factory, machinery, depreciation. $55,000. Factory, supervisor, salaries. $140,000. Factory supplies. 7,500. Factory property taxes. 37,500. And that's it. Depreciation, supervisor's salaries, 2, supplies is 3, property taxes 4. All right. Total estimated manufacturing overhead. Right now, let's calculate the number of direct labor hours, right? We want to calculate here number of direct labor hours, right? So to do that, we want to take the total direct labor, which is 300,000, and divide it by, they told us the rate was $15 an hour, right? Go back to the problem. Calculate the predetermined overhead rate per direct labor hour if the average direct labor hour rate is $15 an hour, okay? So to get the number we're looking for, the number of hours, we need to take the direct labor of 300,000 and divide it by 15. So 300,000 divided by 15 is 20,000 hours. 20,000 direct labor hours, okay? Now to get the rate, we want to take this total estimated overhead and divide it by the total estimated hours. So 240,000 divided by 20,000 is $12 per direct labor hour. All right, so that's the answer to the first part of the question. It is $12 per direct labor hour. Now, part two Determine the applied overhead if 18,500 hours are actual hours are worked. So we want to calculate applied overhead, right? Applied overhead. And to do that, we want to take the predetermined rate and multiply it by the actual number of hours worked. So in our case, it's $12 an hour times 18,500 actual hours worked, right? Which comes out to be $222,000. So that is exercise 5. Part 1, part 2. Right. Next we had exercise 7. Exercise 2-7, which is on page, it's on the same page, page 85. Here we go. Okay, now, again, we're going to go through this calculation again, and then we're going to take it a step further, right? We're going to figure out whether it's over or under applied overhead. So Cambridge Manufacturing applies manufacturing overhead on the basis of machine hours this time, right? Not direct labor hours, but machine hours. At the beginning of the year, the company estimates total overhead to be $325 and machine hours to be 25,000. Actual overhead and machine hours were $372 and 26,000 respectively. So the first thing we want to do, right, is to calculate the rate. Calculate the predetermined overhead rate. So we want to take the total estimated overhead, 325, and divide it by the estimated hours. So 325 divided by 25 equals $13 per machine hour. So every hour those machines are running, it's costing us $13 in overhead. Step 2 was to calculate the applied overhead. And to do that, we wanted to take the $13 we just calculated and multiply it by the actual number of hours, right? Which I believe was 26,000. If you go back to the problem, the actual hours was 26,000. So $13 times 26,000 is 338,000, right? That's the applied overhead, right? That's the applied overhead. 338. Step 3, compute the over or under applied overhead. Okay. Now I'm going to try to draw the account. Now remember, the debit side of the account is the actual, and the credit side of the account is the applied. So the applied is this 338. The actual was 372, right? Actual 372. So the actual, right, was considerably higher than the applied or estimated. So what's the balance in the account? 372 minus 338 is 34,000. The balance in this account, right? The balance is 334, and because the estimate was higher, excuse me, the actual was higher than the estimate, we say that that $34,000 was under applied, right? Under applied. To correct that, what would we have to do? We would have to debit cost of goods sold and credit overhead for 34,000. And by doing that, the balance in the overhead account will become zero. Because think about it, the overhead account is kind of like an expense account, so it needs to be closed at the end of the period and transfer that balance to cost of goods sold. They didn't ask us to do that, so we didn't have to. So that's exercise 7. All right, next, we had exercise 9. Exercise 9. Now, 9 and 10, I think we could do those together, right? Let's take a look, number 9. So number 9 says the manufacturing costs for Davenport Company during 2018 were as follows. So notice they give you beginning inventories, finished goods, raw materials, work in process. They tell you what direct labor is. They give you the ending inventories, finished goods, raw materials, work in process. They tell you materials were purchased in 2018, 304,200, but included in that 304,200 is 15,000 of indirect materials. Remember, indirect materials are overhead, they're not direct materials. So compute the direct materials used, compute the applied overhead, compute total manufacturing cost, compute cost of goods manufactured, oh gosh, right? Compute the cost of goods sold. Okay. And then what they want you to do in number 10 is prepare a cost of goods manufactured report. So what I'm thinking is if we did that, if we prepared this cost of goods manufactured report, we would be answering number 1, number 3, and number 4. Right? And then if we prepare an income statement, a partial income statement, we would be preparing number 5. Right? And we'd also have to compute number 2 in there. Okay. So why don't we let's see. Let's refer to this as E2-9 and E2-10. Right? And this is on page 86. So what I'm going to do is I'm going to prepare a cost of goods manufactured report. Right? And that'll give us some of the answers to number 9. So why don't we put a heading, Davenport Company cost of goods manufactured report for the year ended, for the year, they just say for the year 2018, right? They don't put December 31st. I don't agree with it, but that's what they said. Okay, so the first thing we want to do, we need to add more lines. Let's add some lines. We want to say beginning raw materials inventory. Right, and that amount is $35,500. Okay, now to that we want to add raw materials purchased. Now the raw materials purchased was $304,200. But let's subtract the indirect materials. Remember, the indirect materials they told us was $15,000, right? If we go back to the problem, materials purchased, $304,200, including $15,000 of indirect material, right? So we're not concerned about indirect material. We're concerned here with direct material. Okay. Less ending raw materials inventory. $40,250. Now, if I do that math, I get $284,450, right? And that is the direct materials used. Okay, so you can use that to answer E2-9, right? Part 1. That's the answer to exercise 2-9, part 1. Okay, so now we want to add direct labor. Direct labor is $275,300. And applied manufacturing overhead. Now, what do they tell you? Compute applied overhead if the company applies overhead at a rate of 75% of direct labor cost. Take direct labor cost and multiply it by 75%. So that's 275,300 times 0.75. And that comes out to be 206,475, right? And that is your answer to exercise 2-9, part 2. Okay. So now what we want to do is to add the three of those together. Total manufacturing cost. Direct material, direct labor, and overhead. Add them together. 766, 225, and that's the answer to exercise 2-9, part 3. Okay? To this, we want to add beginning work in process inventory. Beginning work in process inventory. Beginning work in process inventory was $110,300. And then we want to subtract ending work in process. Oops. Ending work in process inventory was 120,600. Right now, if I combine those three amounts, $755, $925, that is the cost of goods manufactured. Right, and this is exercise 2-9, part 4. Right, so see how we're answering two problems with the same numbers. Okay, so that's the cost of goods manufactured report. Right, this would be E2-10 part 1, right? This whole thing is exercise 2-10 part 1. Exercise 2-10 part 2, right, is an income statement or a partial income statement. So this is going to be Davenport. Income statement. For the year 2018. Okay. So sales revenue. How much is sales revenue? Sales revenue is $1,250,000. Right, again, look down here. Prepare a partial income statement if revenue was $1,250,000 and operating expenses were $210,000, right? We already did this part. Cost of goods sold. So cost of goods sold is calculated. We're going to take the beginning inventory beginning finished goods inventory. Beginning finished goods inventory. Beginning finished goods inventory 24,100. Add cost of goods manufactured. Cost of goods manufactured, we just figured out in part 1, 755,925. Now, if we add those two amounts, that gives you something we call the cost of goods available for sale, right? Cost of goods available for sale. And then subtract ending finished goods inventory. Ending finished goods inventory was 22,400. That is cost of goods sold. Okay. So now we want to subtract the cost of goods sold from sales. We get 492,375. What do we call that? Gross profit. And we have operating expenses of 210. Right, and if we subtract again, sorry, I'm still learning my way with this. The number actually comes out to 282,375. And that is net operating income, right? Or income from operations. All right, so that is problem 9 and 10, right? This is actually your answer to exercise 2-9, part 5. Right, so there were 5 parts, 1, 2, 3, 4, 5. Right, so we answered 2 problems at once with the same information. So I hope that's not too confusing. So that's it for chapter 2. Remember, we skipped chapter 3, we move on to chapter 4. And just to give you a little intro to 4, what 4 does, we refine the overhead rate. So remember, we applied an overhead rate here on the basis of direct labor. we said here in this case that overhead should approximately be 75% of whatever direct labor cost is, right? When we did some analysis and we came up with that. And this other problem here, we said that overhead should be approximately $13 for every hour the machine operates. In the first example, we said that overhead should be about $12 for every hour people work. Well, we're going to look more closely at that. We're going to say, well, wait a minute, maybe some of the overhead will vary by direct labor. Maybe some of the overhead will vary based on machine hours. But maybe not all the overhead works that way. So maybe what we need to do is we need to make a list of all the overhead expenses and try to find a different cost driver. Is there something that drives that number more than, say, direct labor, right? Yes, some of them could be based on direct labor, but maybe others could be based on something else. That's known as activity-based costing, and that is chapter 4. So next video will be on that.